Today's episode. And so let's get right into it because remember, we don't have that much time. But I wanted to give you guys 5 reasons why you might owe taxes this year. All right. So today's topic, why do I owe taxes? Now, you all know I'm not here to make friends. I'm just here to give you the facts, right? The number one reason that people owe for the tax year 2024 is not because of the current administration. It's not because of the previous administration. The number one reason that people owe, clutch your pearls, falls back on you as the taxpayer.
Welcome to the Tax Relief with Timalyn podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 57 of the Tax Relief with Timalyn Bowens podcast. Listen, tax season ended last week and it has left quite a few people frustrated. So, some of the things that I'm seeing online, some of the things that I'm seeing, my new favorite platform is Threads, right? I'm going through and seeing people being frustrated because they owe more this year, but nobody really understands why. So I want to talk about that in today's episode. And so let's get right into it because remember, we don't have that much time, but I wanted to give you guys 5 reasons why you might owe taxes this year. All right. So today's topic, why do I owe taxes? Now, you all know I'm not here to make friends. I'm just here to give you the facts, right? The number one reason that people owe for the tax year 2024 is not because of the current administration. It's not because of the previous administration. The number one reason that people owe, clutch your pearls, falls back on you as the taxpayer. Your tax withholding is off. Remember, not here to be your friend, but I'm here to give you the facts. We need to make sure that your withholding is correct. Now, you may be thinking, well, I work the same job or I didn't make that much more income. Something within your life may have changed. Okay, so reason number one why your tax liability is something that wasn't covered throughout the year, your tax withholding is off. In the US, we have a pay as you go tax system. So if you are a wage earner, that means that it is your responsibility to fill out your W-4 correctly so that your employer withholds taxes each time you are paid. If you are underpaid, you are likely also facing a penalty called the underpayment penalty. What happens when this penalty is calculated? The IRS is taking a look at how much you paid in during quarter one, quarter two, quarter three, and quarter four. So, with each paycheck, which for most of you is going to be every other week or twice a month, you have money withheld that goes towards your tax liability on your behalf. Now, if you are a retiree or you are disabled or just living off of annuity, or maybe you have a business, it's going to look a little bit different. If you have Social Security income, but you also have additional income, then that means part of your Social Security income is likely taxed. So you would need to adjust your withholding on a Form W-4V for voluntary withholding from government payments. If you have a pension or annuity, you need to adjust your withholding with Form W-4P. Now, I've already provided for you resources to walk you through how to correct your withholding. What I'm going to do in the notes of this show, I'm going to include a link to the W-4 series. So it doesn't matter if you were single, if you're head of household, if you are retired. I have videos to cover each of the filing statuses, as well as for pensions and annuities and the Social Security withholding. Okay. Now, I mentioned earlier that the IRS is looking at how much you put in each quarter. If you are living off of self-employment income or rental income, investment income, remember, you still live in the US, so we're looking at a pay-as-you-go tax system. You don't have to make payments every other week like when you received a paycheck. Instead, the IRS is looking for you to withhold your own taxes and make what we call quarterly estimated tax payments. Okay? So let's say that you were underpaid this year. However, you paid the full amount of tax in that you owed last year. You then can look at Form 2210 and have that penalty waived. All right. Or if you paid in 90% of the tax liability that you have. Now remember, the amount that you owe and the amount of the tax liability are going to be different. The tax liability, if you were an individual taxpayer, is going to be at the top of page 2 of your 1040. Okay, I believe it's line 16. Now, if you qualify to have that penalty waived, you do have to show that on Form 2210, and I'll link that form in here as well. If you had a life change, your tax withholding could be off if maybe you were married filing jointly and then you got divorced because your tax status for the year is whatever your filing status is as of December 31st. So let's say going into the year you were happily married, life happened, and then you filed for divorce and it was finalized by September. That means on December 31st, you were then single. The married filing jointly tax bracket for those who make less than 250,000 combined is going to be more favorable than the single tax bracket. So you would jump significantly in which tax bracket you're in. Or maybe you had children in your home under the age of 17, so you were eligible for the additional child tax credit, which is now worth $2,000. If something happened where your children got older and they no longer qualify, now you don't have the benefit of that 2,000, it's reduced to 500. Or let's say that you had children in your home and you qualified for head of household. If those children weren't in your home last year and now you're filing as single, you've automatically switched tax brackets and you're not getting that tax credit. So maybe you didn't do anything or change anything income wise, but your life circumstances changed and you didn't adjust your withholding. So again, sorry to tell you, not here to be your friend, just give you the facts. The responsibility for adjusting that withholding is going to fall on you. So again, I strongly, strongly recommend that you check out the video resources that are linked in the show notes. Now, there are going to be people who this year switched to being self-employed because of the turn that the economy is taking, right? What you need to be aware of when you are self-employed is that now you have to pay self-employment tax. So I have people who are new entrepreneurs and maybe they made $45,000 on a W-2 job. And now they've netted, so made $45,000 profit as a self-employed taxpayer. First of all, if that's you, congratulations, because not everybody can do that. But second of all, you probably were hit with an unexpected tax bill. The reason for this is because now you're paying self-employment tax, which is the equivalent of Social Security and Medicare for the self-employed taxpayer. What does that mean? When you are working a W-2 job, your employer withheld 7.65% of your income and paid it into Social Security and Medicare on your behalf. Then what you didn't see is that they also had to pay in 7.65% towards your Social Security and Medicare that wasn't withheld from your check. That comes out to 15.3%. And now that you are self-employed, the IRS still wants you to pay in your share of Social Security and Medicare to fund the program for those that are receiving those benefits. So, from that 45,000 that you've made in profit, 15.3 of that is going to have to go to the IRS for Social Security and Medicare. In addition to that, let's say you're married filing jointly, you are the only one making any income, so you'd be in the 12% tax bracket. So right off the bat, you automatically are paying 27.3% in federal taxes alone. That doesn't even take into consideration if you live in a state that has an income tax and in a city that also has a local income tax. So, what we have here is an additional 7.65%, but nobody's withholding that for you anymore, right? And I don't know about you, but making quarterly estimated payments hurts my little feelings, right? I don't want to see it come into my bank account, then I have to pay it out. So you have to keep in mind that now that's your responsibility. And if nothing was paid in, that quote unquote bigger tax bill is inflated because of your new obligation of self-employment tax. With that being said, in the show notes, I will link another resource that breaks down self-employment taxes in another episode, excuse me, and then also talks about some common deductions that business owners miss on their tax return. All right. So we talked about life changes. Children moved out. Maybe you're receiving Social Security, pension income. So we have your withholding or estimated tax payments were off. Two, you went through life changes. Three, perhaps you owe self-employment taxes. And then number four, you may qualify for fewer deductions. So similar to what I mentioned before with children aging out of being eligible to be claimed on your tax return, that's a credit. If you have children who no longer go to daycare, after school, before school, preschool, you can no longer take the child and dependent care deduction. So again, you may not have done anything to change your actual income that goes to your pocket, which granted, if you're not paying for daycare anymore, you definitely are saving some money there, but it's going to also affect your tax return, right? Congratulations to those of you who have paid off your student loans. You don't have that student loan interest deduction anymore. So your taxable income is going to be higher, which in turn is going to make your tax liability higher. If you switch from having an HSA to a different type of healthcare plan, you're not going to have that HSA deduction anymore. So again, your taxable income is going to be higher, and now your tax liability is also going to be higher. So last but not least, which some of you all don't realize when it happens, the final reason that I'm going to cover today, right? Because there are definitely other reasons, is that you may be in a higher tax bracket now. So I mentioned earlier, if you switch from being married to divorced and now filing as single, you are likely in a higher tax bracket. If you're going from head of household to single, you are likely in a higher tax bracket. Listen up, folks. The way our tax brackets are set up, we go from 0%, and that's for taxpayers who make less than their standard deduction, to 10%, not too shabby, right? To 12%, slight adjustment, and then it jumps to 22%, right? No, nobody likes the feel of that jump. I promise you, it hurts. If you are a family, there are two spouses with children. Sometimes it makes more sense financially for one spouse to be a homemaker because if you were at the top of the 12% tax bracket and then the second spouse goes to work just part time, that's going to knock you all over into the 22% tax bracket. Now, you have to do what you have to do, but you need to take certain things into consideration to make sure that the second spouse isn't going to work just to pay additional taxes, right? Now, I only covered 5 reasons. There are a lot of different reasons why you specifically may have owed taxes this year. Here's the important part. If you do have a balance, you want to make sure that you take care of it right away. If you can't pay the balance in full, please, even with this economic uncertainty, the revolving door in the IRS Commissioner's Office, set up a payment arrangement with the IRS ASAP. In the show notes, I will link the episode where I talk about IRS installment agreements. If you feel overwhelmed in doing so, you may want to consider consulting with a tax professional to walk you through the process or hiring a tax professional to do it for you. If you would like to see if you're a good fit to work with me in my firm at Bowen's Tax Solutions, you can go to the website www.bowenstaxsolutions.com. But as I always say, even if it's not me, just make sure you get the help you need. Make sure that you go in, check your tax withholding, and get that corrected by filling out a new W-4 or W-4P or W-4V, whatever fits your situation. If you are self-employed, make sure that you are making the correct estimated tax payments. If you've gone through some life changes, make sure you account for that when you are looking at your withholding and your estimated tax payments. If perhaps maybe now when you compare your return to last year and you qualify for fewer deductions, make sure that it wasn't a mistake and that you actually don't qualify for them. Because if it was a mistake, you may need to consider filing an amended tax return so that you can actually qualify or not qualify, but capitalize on those deductions, right? Last but not least, the last thing we talked about was being in a higher tax bracket. Listen, there are people who don't know where their next meal is coming from. There are people who don't know if they're going to be able to keep the roof over their head. Paying more in taxes, to be quite frank, sucks. But even in the midst of that, I want you to be grateful for having the opportunity, being able to make more money. Now we have to be forward thinking in our planning to make sure that we're not paying more money than we need to the IRS. Okay? Thank you so much for tuning into this episode. You are helping me on my personal mission to fill the tax literacy gap one taxpayer at a time. If you have any questions or feedback for me, make sure that you leave those down below in the comments if you're on Spotify or Apple, or you can go to americasfavoriteea.com and send me a message in the contact box. I'll see you all in 2 weeks. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.